And Mr. Constancio, before we head into what the ECB may or may not do, I want to ask you a question about the language, because there's investors who would tell you at this point it's very difficult to read what the European Central Bank is doing. It's difficult to read what Christine Lagarde wants to get to. Do you think there's a messaging problem going on?
No, I don't think so. I think that the message has been clear. The programs to reflect the expansionary nature of monetary policy are in place and working. And you can see the outcome when you look for the market interest rates or market yields of sovereign debt and other in the credit market also. There has been a big decrease. You have now 10-year Greek bonds below 1%, as well as for Italy, for instance. So the expansionary nature is working, and is very clear. Also, the message that has been conveyed by officials of the ECB that they may change the program, increase it if need be, and that's something for the future. But it's working well so far.
And I just want to ask you again on the language. You know, when you hear Christine Lagarde, just to give you one example, you know, on the euro, where she says we're going to monitor it, but we're not going to target it. Let's not get too carried away. But then you do get the chief economist, Philip Lane, say, well, we look at this as problematic for the inflation outlook. Isn't that whiplash, though, for the markets?
Well, what Philip Lane said was that, of course, the ECB has to close monitor what happens to the exchange rate, but it has never been a target of policy, and it cannot be, and it isn't. And by the way, the fears or the noise in the market when the euro was creeping up to 1.20 against the dollar have subsided completely, because now it's again at 1.17, which, by the way, was exactly the level of the exchange rate when the euro started in 1999.
And you're right to say that the conversation on the euro has really changed over the past few weeks, but the conversation now changing into whether or not we're going to see action taken by the ECB potentially in December. Do you factor that we're going to see an increase in the PEP program? If it's not the PEP, what do you think we're going to see come December?
Well, I think that any measures that may come or not will concentrate on purchases of securities, either the APP or PEP. It depends. If indeed it is warranted to increase the program, which they can do, of course, but that would be more related to inflation prospects and performance than with anything else, and certainly not the exchange rate, which is now at a level which is, I would say, normal when we compare to the old trajectory of the exchange rate against the dollar since the inception of the euro.
And how much do you worry about inflation, or the lack of, especially when you look at core inflation? There's some voices out there who are bringing up the word deflation again. How worried are you?
Yeah, you are right to point to the core inflation, because that's the more concerning figure right now. It has become very, very low indeed. The headline inflation reflects, of course, several well-known facts, particularly the price of oil, which a year ago was around $70 per barrel, and it's now barely at 40. So that indeed has a big effect on headline inflation, but also apparently in core inflation. But there is a reason of concern regarding the very low level of core inflation right now. But on the other hand, we all know that this is something that has to do with some commodity prices. It has to do with the decrease in VAT in Germany, which weighs a lot in the index, and other factors related to the virus crisis, which is very specific. All these factors are things that monetary policy cannot offset in the short term. So we need a bit more data to reach a conclusion about inflation prospects, which they can do then in the December meeting.
And if there's a reason for concern on the inflation, I want to ask you also about another potential reason for concern, which is a recovery fund. You know, if you look at the recovery fund, the idea that there is going to be money flowing from the Commission to countries has really anchored yields, but there's a lot of talk already that that could be delayed. How problematic could that be if we do see a delay to the recovery fund?
Well, it is problematic because one of the risks for the recovery next year could be the insufficiency of fiscal policy stimulus in general in the euro area. Since the beginning, one could predict that the package of the recovery fund would take time, first to get final approval, and second, to prepare all the projects and plans at member country level that are necessary to draw on the facility. And the Commission has published 2 weeks ago its proposal, which goes to the Eurogroup now in what regards the details, the objectives, the template for the preparation of those plans, and as in that proposal define the objectives of the recovery facility in relation to cohesion and resilience of the euro area through investments and reforms, and links the plans that have to be prepared in each country to the objectives of the medium-term initiatives of the EU, to the so-called European flagships, which are very much related with climate change and digitalization, concentrating more than 50% of the expenditure that can be done using those funds into these two areas, so making the program a medium-term support to more structural policies, which is a guarantee that the money will be well spent, being compatible with medium-term objectives, but also linking the plans to the European semester and to the country-specific recommendations. So the proposal of the Commission is surprisingly quite detailed and complex, mentioning perhaps too many objectives at the same time, because there are 4 major objectives, as they say. So that implies that, for instance, the ECB in its monthly economic bulletin has foreseen that in 21 only 10% of the grants program can be disbursed, and 15% in 2022, which means that the bulk would be concentrated only in 23 and 24. So this indeed means that the European level fiscal stimulus will not be very significant next year, which implies that national fiscal policy will have to continue to be expansionary, which, by the way, is foreseen in all projections of international organizations that are foreseeing a deficit at the euro area level around 8-9%, and next year
that will continue to go up.
5-6%. Yes, so
Mr. Constancio,
that puts that next year on national fiscal policy. As you know, nevertheless, the Stability Pact has been suspended also for next year, which helps. But I think that a deep revision of the Stability Pact is now totally needed and has to be on the table to discuss.
And should be put into practice.
I don't see that after this type of crisis and the increase in debt can be compatible with the present terms of the Stability Pact.